going on, everybody? Chad Castellanos here with goldpay.us. Just want to go over the gold market the last few days and kind of get into perspective of a little bit longer term view over the last year, roughly, of what's happened in the gold market and why I think it's bottoming and the support and resistance zones that are currently happening right now. If we go back to early last year, gold shot up in January, February of 2016. It shot up a couple $100 and kind of just consolidated right here till summer, and then shot up again into July, August period. And since July, August, we've had this sort of head and shoulders, or really small head and shoulders, not like a large long term uh, bear market top or anything. It's just a short term topping pattern. Um, and within that, we gapped down here, we moved down, and then came back up into the support. And Donald Trump got elected right around here. The super spike that happened overnight. I don't know if you guys remember that, but that ended up failing, and then gold actually got pummeled from roughly $1,300 an ounce and went back down to 11.20 per ounce. And since middle of December last year, we've kind of formed a temporary bottom. Um, so basically, what if we draw a trend line from around here? You got this accumulation in 2015. Then it fell down in the late 2015, early 2016, came up, broke above that accumulation, and then started to accumulate above that. Now we're just kind of consolidating in this entire zone here. Um, and resistance is at 1220 and support is around 1120. So if we break through 1220, we can probably look for, if we draw a trend line, we can probably look for a temporarily top at the 1250 range, where the 200-day moving average is close. The 150-day moving average would be close to that. It'd be extremely overbought if it got to 1250, so we'd look for another pullback. Once it hit 1250, it probably drop down, do something like this and drop down to back down to 1220-ish area. And it may even fall back down to the 1100 range. It's hard to say, but the 50-day moving average is around 1180 right now and starting to tip up for the first time. So that's a good sign. If 1180 were to hold the 50-day moving average, we'd be in good shape, and we could look for some more consolidation and perhaps breakout in a few months from now. Or what could happen is we could just move sideways for the entire summer and break out more or less in the fall period. Um, a lot of people may mistake this for like a larger head and shoulders pattern, which is, there's a head here or shoulder here, head here, and then another shoulder. But if we look at the long-term trend here, this is the long-term trend of gold, and I'll throw this into this program here. Um, this is what we're looking at on the last chart, and this is more or less a bottoming pattern in my opinion, because we broke the downtrend line of, from 2011. This is the downtrend line of 2011. We've broken it, and now what I think we're forming is basically a reverse head and shoulder pattern, not a head and shoulder pattern like some people might think it right here. So if we get, long term, if we get above 1350, this move would probably take us, let's see, $300, uh, a $300 move higher. So we could potentially get to the 1650 zone if this head and shoulders pattern goes through, which would be a huge move up if that were to happen. But for now, let's just take it one day at a time. Right now we're at 12 in the $1,200 range at this moment. The Fed's going to speak soon today. Whatever it is, they can't really raise interest rates above the rate of inflation. I've been on record saying they can't raise rates. They actually did raise rates once or twice, and I guess I was kind of wrong about that, but sort of right about that at the same time because if you look in my past videos, I was expecting a crash to happen in 2016. And when they did raise rates in December 2015, 2016 was the start of the worst start of the year, I think, ever in the stock market. It was just plunging like hundreds and actually like hundreds of points a day. It was sometimes like 300-400 points a day, and it was just falling like a sharp knife. And the only thing that really bailed it out was the Federal Reserve reversed their calls of raising interest rates in 2016 for the rest of the year, and we basically didn't get anything except for they raised rates in last December. But what that did was is it bailed out the stock market for temporarily for a while. Now, if they can get inflation going, let's just say 5 to 7%, and interest rates are at 2%. Let's just say they're not even close to 2% right now, but let's just say they're at 2%. That's a -3% range. If they keep the rates below the rate of inflation, you still have a negative yield. So either way, if they create hyperinflation or whatever, superinflation, they're still behind on the curve, and money will be eroding its purchasing power. Um, and look for gold to just respond to that, even in a deflationary environment. If we get deflation, which I highly doubt, but that's possible, we could see gold go up from there. So